Attention all you New Yorkers. Excuse me, taxi.
Okay, man, we're looking around.
This is the 77 WABC minicast.
Welcome back, everybody. Hour 3. We're going to do some stock market work. By the way, you can live stream us on the internet if that works for you. LarryKudlowShow.com, LarryKudlowShow.com. Hear us all across the country, around the world, throughout the solar system, including the Milky Way. And by the by, please join us during the week on fabulous Fox Business Network. Name of the show's Kudlow, Monday through Friday, 4 p.m. every day. And if you can't make it at 4, just text your favorite 9-year-old, and she will show you how to DVR the show. So let's turn to the stock market, which was a little sluggish this past week. But basically, I think profits are still going to be driving stocks, okay? And we talked about interest rates earlier, and how all the inflation-adjusted rates, the so-called break-evens, have been low, and got people out there talking about 1, 2, and 3 rate hikes. I think they're out of their mind. The economy is probably better than most folks think. But let's explore. We have one of my total favorites here, Stephanie Link, Ms. Stephanie Link. Hightower Advisors, Chief Investment Strategist, and Head of Investment Solutions. The best of the best. And if that weren't enough, Ken Polcari is here, Chief Market Strategist at Slate Stone Wealth. All right, now, Ken, I'm going to go to Stephanie first.
That's great. I love Stephanie, so go right ahead.
Right, because she's Stephanie Link, and
That's absolutely correct.
We have to hear the riff. Because she's going to save us again, as she always does. So, Steph, what do you think of the world? Give us an overview.
What an introduction, and it's so great to be with you and Kenny as well. I think that you hit the nail on the head when you said the economy is better than what people think. I was away, not last week, but 2 weeks ago, and just was catching up all week on all the economic data that we've seen in the last 2 weeks, and it's been really good. The consumer, it started with retail sales 2 weeks ago at 5.2%. Ex-auto 6.1%, control group 6.3%. We know the control group goes into GDP. You got personal income this past week, better wage numbers, and weekly claims that are still very, very low. On top of that, on the industrial side of the economy, you've got PMIs on the manufacturing, the best since 2022. And, of course, we know services is very good, but the manufacturing piece is really heating up. And, of course, we know that that's all tied to the whole AI and then what I say is the food chain, data center, grid, power. All these sectors are benefiting from all this enormous CapEx. But the most positive thing, in my mind, in this past week is that oil prices continue to slide. We are now down 39% from the highs. So not only is that good for the consumer and all of the throughput for businesses, but I think inflation has peaked. And I think that's what the bond market is telling you with yields coming down. And that's all of this is very positive for earnings, to your point. Absolutely. We're expected to grow about 20% in earnings this next quarter.
Pretty soon people are going to be complaining that oil prices are too low.
Yeah.
The oil companies who are predicting $250 a barrel, they're going to be yelling because we're going through 70 into the 60s. How about the gasoline prices? They're going to keep coming down, aren't they, Steph?
Absolutely, and we know the administration has been very vocal about that to the oil companies. They tend to raise prices faster than they lower them, but they are going to lower them, and that is going to be really quite positive, I think. And I mean, I think at the end of the day, like the market is, we can get into this whole technologies wobbling a little bit, but we're starting to see a broadening out. We should see a broadening out when the economy is growing 3% plus. And so financials have caught a bid. Healthcare has caught a bid. I think discretionary is your hidden value in this market right now because of all the things that I just said.
Kenny Polcari, you've been around a while. You ever heard the phrase, oil traders phrase, rockets and feathers?
Yes.
Rockets and feathers?
Yeah, I've heard it, but you can probably explain it better than I can.
No, it just means that gasoline prices go up like rockets
And come down,
but they
like
come
feathers.
down very slowly like feathers.
Right.
So you
Yeah.
have to have a little patience is what you have to have.
The gasoline prices, though, are they really set by the oil companies, or are they set down at the retail level?
Retail.
Aren't they more set by the retailer?
Retailer.
Yeah,
But-
they're not set by Exxon and Chevron.
But the president loves to stick it. He gives them a little stick.
Yes.
I've seen this movie before. I mean, I experienced it firsthand. So,
Yes.
but yeah, the local stations do. But it will. But you're going to come down a lot more, aren't we?
100%, especially if we see oil. If this ceasefire holds, and I really think it will. You got to take what happened last night as an outlier, I think. And I think we're going to continue to see oil prices come down. You saw what happened in Saudi Arabia yesterday. They were loading up, 2 large tankers and sending them through, something we haven't seen in months now. Yep. And that just suggests that, it's going to start to flow. And once it does, I think we're going to see oil come back down to the mid to low 60s, which is, I think, about where it was right before. Maybe it was in the mid 60s when the conflict started. But I think we're going to see it drop to the mid low 60s, and that should once again cause, it will cause gasoline prices at the pump to decline much faster, I think.
There's a guy who he's an analyst for Fox Business. I mean, I'm sure he has his own company's name. Phil Flynn, you guys, I don't know if you know Phil Flynn.
Yeah.
Nice guy. Anyway, he's talking about a oil production tsunami where you pointed out Saudi Arabia, but also Iraq wants to produce more. UAE wants to produce more.
Right.
And then they're shipping oil through the East-West pipeline, and they're building another pipeline, if I'm not mistaken.
They are.
So, the OPEC monopoly has been damaged. And yes, I agree with you. The ceasefire, the strait will stay open. So that's got to be good, Kenny. I mean, it might even be good for interest rates.
Yeah, I think it'll be good for interest rates because, to Stephanie's point, I do think inflation has peaked. I think if we start to see oil come down some more, then that's going to take some of the pressure off. Now, there'll be other parts of the economy, and you saw it this week in MU's announcement that there's that supply shortage in memory, and so prices are higher, and right away Apple raises prices and Microsoft raises prices on their Xbox. But that's not stuff you buy every single day, right? You buy gas almost every day or weekly or however you buy your gas. That's going to be much more noticeable. And so I do think that, to Stephanie's point, inflation will come down and this rally will broaden out. And in fact, if you look at what happened this week, yes, there was pressure on tech, but look whatever else. Caterpillar was up 11%, 5% on Monday, 6% on Thursday or Friday, whatever day it was up that much. Honeywell was up, IBM was up, Johnson & Johnson was up, Merck was up. So it's absolutely spreading out, which is a positive.
Stephanie, a little Fed watching. We had earlier in the week, Bank of America said there are going to be 3 rate hikes.
Yeah.
And everybody had to swallow hard on. I don't know what you think. I don't see it. I don't know why it's necessary.
I would agree with you. I don't see rate hikes. I don't see cuts, though. So I think that they'll stay where they are. Because, and this is really important, even though oil's coming down and commodities are coming down, the AI food chain is, by definition, it is inflationary. And it's to what Kenny just said, we're short memory, we're short compute, we're short copper, we're short aluminum. So pre-war, inflation was running about 2.8%, ahead of the 2% target the Fed wants. Now, I think we can get back there. And then I think that Warsh and team, they're going to have to watch it, monitor it, and see what happens. Eventually, this whole AI CapEx boom is a productivity machine. And so we want to watch that to offset some of the stuff that we're short. And that could also be very helpful and productive for inflation. But I'm not sure we get to 2%. So that's why I don't think they're going to be cutting anytime soon.
Right.
What about these break-evens? Like the 2-year tips break even 197, the 5-year tip 222,
Yeah.
the 10-year tips implied inflation 220.
Yeah.
Now those are, that would suggest that inflation expectations are anchored low. So we haven't really done any damage. Now, energy is, dominates the economy. These energy prices affect hundreds and hundreds of prices. So if they come down, doesn't that bring the CPI down?
100%.
Yeah.
I'm sorry. Yeah, go ahead, Kenny.
No, but it's going to bring PPI, CPI, and the PC is going to bring all three of them down.
Yeah.
It should, anyway.
Yeah.
Well, you know what? If rates come down, then this action we're seeing in housing, because the housing stocks took off this week, then you can actually get a housing cycle. If you can get the 30-year fixed at under 6, D.R. Horton has said it, under 6, we start to see much more demand because the demand it's so pent up. And we're still 4 million homes short in this country. We are growing 3% in GDP, and we haven't had a housing cycle yet. Can you imagine if we actually do and what that would do to growth? That would be very, very good and very positive.
I'm looking at my sheets. S&P 500 home builders were up 5.8% this past week. Is that what you're talking about?
Yes.
That's a bit. Why is that? What's cooking there?
Well, I think you look at yields, and they've come down. And I think people are expecting that yields will continue to come down because inflation is coming down, and therefore we have all this demand. We have 5 million millennials that want to buy a home. We have home builders that are buying back their stock instead of building because it doesn't make sense. And so we need rates to come down, and if rates do come down, and they're just too high right now, 6.5% 30-year fix is not going to do it. But I do think that what we're anticipating is rates will continue to come down, and then eventually you will see this demand. And by the way, these companies are doing a masterful job in the face of all of this difficulty, these headwinds. They're still putting up good gross margins, good orders, and good earnings because they are managing it well.
I tell you, as I've said this before, I sleep better at night knowing that Stephanie Link is still in the investment. I sleep better at night. All right, let me take a commercial break. We are capitalists here. We're talking to the great Stephanie Link, Hightower Advisors, Chief Investment Strategist and Head of Investment Solutions, and Kenny Polcari is the Chief Market Strategist at Slate Stone Wealth. I'm Kudlow. We're going to come back, talk about profits, the mother's milk of stocks. We'll be right back.
This is the Larry Kudlow Show.